let's also bring on board Mr. Rohit Srivastava, founder and market strategist at IndiaCharge.com. Rohit sir, thank you for joining us here on News9. Now, we were just discussing the December quarter earnings of IT companies that start today, but overall, it looks like this time around it will be more of the same of what we saw in Q1 and Q2. Weak demand, cut in revenue guidance and all. So, anything that you are looking at that particularly we might or the street might be missing out on?
Well, if we actually look at the initial performance of key sectors in the first 10 days of January, three of the weakest sectors are actually IT on top, which is down over almost 3%, followed by metals and banking. So somewhere these look like the weaker sectors right now. And since we are kicking off the earnings season, unless there's some kind of a positive surprise, it could result in further weakness for the tech sector. So that is sort of how we'll be approaching this. But of course, we're going to start getting the numbers from tonight. That will give us a better perspective of what is happening.
And what's your overall sense of the market movement? Quite a choppy start to 2024, and in the last 3 or 4 sessions Nifty has been making lower highs and lower lows, in fact, and it doesn't look like a market that was back in November and December when all we were doing was move higher, but quite a bit of volatility in January, isn't it?
Yes, so the Nifty's actually peaked on the 1st of January and we haven't been able to take out that high. Yesterday's price action did give some hope that maybe we will make one more last attempt to touch 22,000. So I will leave that possibility open, but not with certainty. Having said that, once we are done with this pop over the next couple of days, we should probably see the market roll over again to the downside. So we are broadly looking at a topping formation occurring in Jan of 2024 and further weakness in the months ahead. But it's just a matter of timing it accurately, getting it exactly down to the day. Now there's a lot of rotation, so that is why we keep seeing different sectors do well in between, and the Nifty is holding on. But I do think that this is sort of a distributive process. And should be complete soon, and we should see things turn, whether it turns right away or whether it turns after the budget. That is the time question rather than the price question.
Good morning, Rohit. I'll draw your attention to something that we had spoken about a few days ago, that foreign portfolio investments in 2023 have been highest in rupee terms in the history of India at 1.77 lakh crores. But if you look a little closer at the statistics, FPIs threw in almost 28,000 crores in the banking sector and financial services sector in the month of December, after taking out almost 4,000 crores in the previous month, that's November. My question is FPI really a factor that we should look at when we determine the strength of an economy, or is it just one fickle indices that it changes month on month? They're just making a dollar on their money investments.
So they're definitely here to make money. But having said that, from an economic standpoint, fortunately or unfortunately, most of our current account deficit does get financed still by portfolio flows than FDI. And when portfolio flows are negative, then you do see the currency significantly weaken. So when you go back to the last bull market between 2001 and 2008, the USD was actually getting stronger, moving down from a high of 42 all the way down to a 38 or 37 during that bull market. Now, do we see the same thing over here? We have seen the market actually move up, say even all the way back since 2015, 16. And the USD which had hit 69 back then, is now at 82, 83. In fact, even in the last year, as the market has gone up, the USD has moved higher. What that really reflects is the lack of sufficient flows from FIs into India. So even as you speak of 2023 net for the full year, we've actually seen an outflow of 16,000 crores. Now that is small compared to 2022, where it was almost 2,74,000 crores, just because the last 2 months ended up being positive. Now, the last month, in fact, December was positive more also because it was year-end where a lot of allocation happens. What you really want to watch is whether that pattern which you're talking of, money coming into banking and all, really continues in January. because this is the new year and you want to see whether that was just an aberration. And yeah, it's important from an economic point, from a currency point. And equities have not been impacted because of domestic flows. But does that pattern that we saw in December really continue? I think that's what we need to watch for in January.
Do you expect it to continue with JP Morgan expecting a bigger Fed rate cut than expected?
So this is an if and then question, because if rate cuts do happen and the dollar does weaken, then emerging market flows tend to go up. That is just the history. So if that does become the environment, then the chances of more money coming in are definitely high. But I will not take it as a given right away, because all you have is a Fed saying, okay, we will discuss the idea of cutting interest rates. It is not yet a certainty, and the market has sort of almost priced in several cuts when interest rates have not fallen that much, or even inflation. I have different reports saying, whether inflation will really go back to zero. It's going to just stay sticky at 3 to 4%, which will then make it difficult for rates to go down a lot from here, even as growth is high, government spending is high. So I don't think the answer is there yet in terms of the possibility to cut rates. I think we should really wait for policy action before taking that call.
Okay, Rohit, and finally we are in the month of our budget and the last budget of this government. What are your expectations from this? Will it be an interim budget, or they'll be budgeting for the whole year if they are expecting to come back?
No, they have to follow the standard pattern. I mean, it's going to be a vote on account budget. They can't do much more on the policy front. So it will be almost a continuation of previous policy and previous spending plans that were there last year. So there will be an attempt to do that. Can they really make a huge change in the spending? Let's see. It's not typical. So you can't really call it an interim. I mean, it's always going to be the next, whenever the new government comes in, they're always going to have a interim budget where they will, try to announce new things. So that is just going to be the pattern.
Right, that's the view from Rohit Srivastava. Sir, appreciate your thoughts, appreciate your time. Thank you for joining us here on News9.